Hello everyone. Today I want to go over this week's analysis that I've posted on my X page and some executions that I've taken based on the analysis. And in the end, I'm going to walk through and break down my post-lunch execution that I took today. So stay till the end for that breakdown and let's get started. I'm going to be building upon what I expected in price going into the week. So we're going to start with Tuesday and it's going to be almost like a story. So please follow along. So on Tuesday, I framed my bias and analysis using the dollar index because the daily chart on the indices, especially on the NASDAQ, was range bound and in consolidation. But here on the weekly chart for the dollar index, we can see this buy side imbalance, sell side inefficiency from this candlestick's high to this candlestick's opening price, which is the volume imbalance that we have to take into account. And you can see the bodies are remaining well above the upper quadrant of this BISI. We have the previous week's high. This is the current weekly candle. So I was anticipating a run for the previous week high. And then we have this buy side liquidity and then the swing high, creating the relative equal highs on the weekly chart. And by Tuesday, it had already worked in the upper half of this BISI and was able to displace above the BISI's high and show strength. So I was anticipating a run towards the previous week's high and ultimately towards the buy side liquidity here. So since I was bullish on the dollar, I wanted to see lower prices on the indices. So for Tuesday's overnight analysis, the daily chart on the NASDAQ, we can see these clean relative equal highs, very smooth. And I stated that although one may argue that price is likely to reach for the smooth annotated relative equal highs, because I anticipated higher prices in the dollar index on the higher time frames, I wanted to see the indices work lower because they're inversely correlated. So last week, price created this volume imbalance on the daily chart. This is Friday's candle last Friday. This is last Thursday, and you can see that gap there forming the volume imbalance. You can see Monday's candle working just into that volume imbalance, remaining in the lower half, couldn't even reach consequent encroachment, and then broke lower. And I stated that if it could get above the previous day's high, I wanted to see premium sensitivity from the opening price to the low of this daily bearish order block, because on a bearish order block, the most sensitive portion is from the opening price to the low. That's how ICT teaches it. So I expected to see some sensitivity in this range here if it could reach this level. Ideally, I wanted to see it remain beneath the consequent encroachment of the wick, because wicks, again, are inefficiencies. So if it can remain in the lower half of the wick, that is a sign of weakness. And then on the hourly chart, we can see that bearish order block's opening price, the consequent encroachment of that daily wick. I've just annotated this 1 hour bearish order block. Same thing here from the opening price to the low, because it's overlaying those daily key levels. You can see the bearish order block, opening price, and the wick. And this is the first prominent PD array in the premium portion of this range. You can see from this swing high to this swing low, or this swing low. Equilibrium would be right around here. I'm just eyeballing, and this is the first PD array in the premium portion and the first prominent up close candle as well. So with that in mind, in addition to the alignment with the daily key levels, I expected to see sensitivity here. All right, now going into Wednesday's analysis, we'll look at how the price action was on Tuesday and if it behaved as per the analysis shown previously. So again, starting with the dollar index, we can see Tuesday's daily candle was bullish. This blue shaded region is that weekly BISI that I had shown earlier, and it's approaching that previous week's high. It's in close proximity, so that is still the next draw for me. Clean relative equal highs there on the daily chart. And again, with that in mind, I anticipated lower prices in the indices. The daily chart, we can see Tuesday's candle here, which is this large up close candle. And as expected in the previous day's analysis, I had this wick consequent encroachment annotated, and I wanted to see the bodies ideally stay in the lower half. And you can see that it didn't even reach the midpoint of the wick. What does that show? Weakness. With that in mind, going into Wednesday, I wanted to see price gravitate towards the midpoint of this wick. Wicks are inefficiencies as well. I wanted to see price draw to its midpoint. Lastly, we have some unfinished business with the sell side. A small mohawk wick beneath this candlestick's low here on Tuesday, but it's not enough for me to conclude that it's done its business for the sell side here. All right, looking at the hourly chart for Wednesday's analysis, look how cleanly the bodies are respecting that hourly bearish order block defined. The bodies are lying beneath the opening price of that candle, which is an algorithmic sign of weakness. Again, couldn't reach that midpoint of the wick on the daily chart. And then we have this swing low here, which was the next draw for me at the time. All right, so next I'm going to go over the execution that I took based on Wednesday's analysis, what I expected in price. I do have the screenshots from my phone, so bear with me here. This purple shaded box is that hourly bearish order block that was predefined. And then going into the London session post midnight, you can see the midnight opening price being annotated here for this candle on the 5-minute chart. So at this point, we're approaching the London session. I used this bearish order block's opening price for my entry, and there was this inefficiency here on the 5-minute, I had my stop loss placed above this candlestick's high, which would also make up the bearish order block as well with these 3 up close consecutive candles. So with this BISI being used as inversion, this bearish order block, you have this SIBI in here as well. In addition to these consecutive up close candles, I felt my stop loss was safe here if it was truly bearish and if I was on the correct side of the marketplace. And also you can see this is a balanced price range. You have a 1 pass higher and then a 1 pass lower. So this price range here is balanced, and you can see the bodies remaining in the lower half beneath the consequent encroachment of the buy side imbalance, sell side inefficiency here. Also, I'm buying above the midnight open. So in relation to the midnight, I'm selling at a premium. And once price displaced beneath the midnight open with speed here, I moved my stop loss to break even. And you can see this was that first draw that I had identified in Wednesday's analysis. And this was that daily prominent wick, the midpoint of that wick, which was my original target. And for a singular contract, going for a full pull of close to 250 handles overnight, this is more of a best case scenario type of a target. And you can see here, this was met rather quickly with speed. And I had already placed my stop loss in profit as well, in case it ran against me. And because I chose not to take the more low-hanging exit, which was still rather fruitful, I trailed my stop a bit more aggressively here, just above the midpoint of this SIBI, and that's where I got stopped out in profit. So 29,220 to 29,104.5. So you can see here how the analysis helped me frame this setup in real time, how I executed upon it, and with this singular setup, I was done for the week. All right, lastly, moving on to Thursday's overnight analysis. I'm going to start once again with the dollar index. I was still bullish on the dollar, did have a small retracement on the daily chart, but with this wicks midpoint and this volume imbalance being in close proximity, I wanted to see these two levels offer support for higher prices and see it work above these relative equal highs and then the previous weekly high. All right, looking at the daily chart on MNQ, once again, we can see that bearish order block bodies respecting the lower half of that wick, and Thursday's candle failed to reach the low of this candlestick, making the bearish order block. Also, another thing to note here is there was a relatively large new day opening gap formed on Thursday, and on a lower time frame, it was able to work above the gap during the Asia session and then broke lower. So this is essentially a balanced price range because it had 1 pass up on the lower time frames and 1 pass down. And because it wasn't able to touch the bearish order block, that's also a sign of weakness. So at this point, I would like to see price stay within or beneath the new day opening gap here and not go above it. And there are lots of obvious sell side pools of liquidity. We have the previous day's low, which is in relatively close proximity. So that was the next draw for me on the daily chart. And then we have these equal lows as well from earlier in the week. So if it could displace with speed beneath the previous day's low, it could very well reach for these equal lows here. Also, for a more low-hanging fruit objective than these equal lows, you can take the event horizon, which is the midpoint between this swing low here and this swing low. So it'd be somewhere in here. And you could target that as well if you want to get something beyond the previous day's low. All right, looking at the hourly chart now, you can see how this week price has utilized that bearish order block on the daily chart numerous times, showing premium sensitivity, failing to reach the midpoint of that wick. And this is Thursday's opening price, broke lower, then displaced higher through the new day opening gap outlined in purple. There's this bearish order block on the hourly chart. That's its mean threshold. If price is bearish and weak, it should not reach the mean threshold of a bearish order block. Also, it's in alignment and overlays the daily bearish order block shaded in red. So lots of factors in alignment supporting lower prices there. And then price breaks lower. What is this here? 1 pass higher, 1 pass lower, balanced price range. So it's done its business here. This range is balanced. It has now no reason to work higher from here. Previous day's low is in close proximity, clean relative equal lows here as well. Looking at the 15-minute chart now, that is that mean threshold of that hourly bearish order block. And I've annotated this SIBI. Look how the bodies are staying beneath the low of that SIBI. That is a sign of weakness once again, and then price folds lower. So this move here, working higher, that was to trap breakout buyers going long. And in relation to the new day opening gap, if you're buying anywhere up in here, you're buying at a premium, and that's not something we want to do. Swept the relative equal highs here, reached this inefficiency, and then folded lower. So ideally, if you're looking to go short, anywhere in here is a good opportunity to short. Turtle soup above these relative equal highs. You can sell in this portion here. That's something you see ICT do all day. You can sell anywhere in the range of this candlestick here, or even in this candlestick. Why? Because you want to be looking to sell in a premium, and you're also above the new day opening gap, which is another factor supporting the narrative of being in premium. But I've annotated the sell side liquidity here. Very clean relative equal lows. This is the event horizon from previous day's low to this swing low, this dashed line here. That would be the next target in between these two pools of liquidity. And because I was done for the week, I did not engage in price and I was away from the charts. And once again, this is a screenshot from my phone, so apologies for the messiness. But you can see the bodies are respecting the new day opening gap, which is what we wanted to see after it worked beneath the new day opening gap. And then it folded lower, sweeping the 15-minute relative equal lows, that event horizon, and the previous day's low here. Worked higher once again. The bodies are respecting the new day opening gap below, and then it folds lower, going into the New York AM kill zone pre-session. I believe this is right around 7 a.m. And this red line was that unfinished business on the daily chart that I had annotated previously. So all levels outlined, all objectives were met, and you can see how price delivers with such precision. It's beautiful to see. All right, lastly, I would like to go over the PM session paper execution that I took. First, I want to outline what I framed the narrative off of. So this is the regular trading hours opening range gap, Wednesday's settlement price, Thursday's opening price at 9:30, and this here is a negative 0.5 standard deviation. Now, if you're not aware, the lunch macro begins at 11:30, and the lunch profile is that it will retrace into the range of the AM session, targeting a high or a low formed after 10 a.m. So right at 11:30, you can see the bodies are respecting the negative 0.5 standard deviation, and it immediately starts to retrace higher, working into the AM session's range. And the precision and delivery of today's lunch macro retracement is just beautiful to see. And because price has been so weak, it was only able to reach the lower quadrant of the regular trading hours opening range gap, which is something you'll see when you have a relatively large opening range gap, which we do in this case. It will have a retracement to the lower quadrant and then continue in the direction of the gap. I expected after the lunch macro for a continuation lower. So that's what I was framing my execution off of, just to provide you some context. All right, now going into the charts to walk through the execution. I've marked 11:30. This is when lunch begins. I don't have the regular trading hour standard deviation projections here, but it was in this vicinity here. The bodies were respecting it, showing discount sensitivity. It had its retracement higher. I've annotated a 15-minute premium wick, and you can see its lower quadrant, midpoint, upper quadrant. And you can see the bodies respecting the lower quadrant of that wick and then breaking lower. Now, when this happened, as price was approaching the 12:50 to 1:10 p.m. macro, I anticipated the start of the bearish continuation going into the macro. So I entered with 3 contracts in the premium portion of this wick on the 3-minute chart. Price gets beneath this candlestick's opening price. That validates them as the bearish order block. And when price worked into this candlestick's range, that's when I looked to go short. I had my stop placed above this candlestick's high, making the fair value gap, just in case price wanted to revisit this inefficiency here. And then it retraced, and it did end up going into the inefficiency, but you can see the bodies are in the lower half. When it went above this swing high here, that's when I sold one more, added to my position. And when it wicked into the consequent encroachment of this wick during this candlestick, that's when I sold another one. I could have gotten a better fill on this one had I waited for the midpoint of the inefficiency, or going for a more turtle soup sell above this swing high. But at this point, I didn't expect it to run above this high here. So I looked for the midpoint of the wick for my entry. For my first target, I had a partial planned at this inefficiency in the discount portion of the range from this swing low to this swing high, this minor sell side, and then this was my terminus, which is an older swing low. But as you can see, price was rather lethargic and didn't really show the willingness for a strong move lower. So as it formed this swing low, I decided to take one off when it got beneath this swing low here. And as it did on this candlestick, that's when I sold one just to secure some profits. I moved my stop to break even at this point, and my position was just near the low of this inefficiency after pyramiding these two. And then I sold 2 more at the planned partial high of this inefficiency. And after it showed this displacement lower, I moved my stop loss to this candlestick's high. And as you can see, it failed to reach that minor sell side for another partial, and I got stopped out on the last 2 here. This was about a 1.2R trade, risking, I believe, 0.62% at its max and a net gain of 0.77%. So even though this didn't reach my planned targets, I was still able to walk away green with just some good risk management and trade management. All right, that's everything I had for this video. I hope this was helpful. I hope you learned something. Please leave a like and comment if you did. To follow my overnight analysis posts, please go visit my X page. The link is in the description box below. Thank you guys for watching, and I'll see you next time.